Thank you, Manav. A very good afternoon to all our delegates, both physical and virtual. Joining us live from Singapore is Mr. Jesper Palmqvist, Area Director, Asia Pacific, STR. Jesper has more than 20 years of experience on the supplier and aggregator sides in hospitality, online travel, and IT through various verticals in regional European IT startups and hotel chains, as well as global companies such as Orbitz Worldwide, Wyndham Hotel Group, and Groupon. Today, Jesper is here to take us through a hotel view of the world. Over to you, Jesper.
Thank you very much, and I'm delighted to be here today and tonight. I suppose I should say it's evening here in Singapore, and I'm so happy. But at the same time, I'm obviously crushed that I can't be there. I hope you have an excellent evening there tonight at the Palace. I'm sure the GM Nyan Set is taking good care of you. But what a delight to be in a room together and celebrate. Now, I will walk through some data and some interesting points, but there are markets I won't cover, and there's detail that I will leave out. For any of that, you can always reach out to us afterwards, but also, even easier, you can locate Vidhi Godiawala in the room. So Vidhi from our team from Mumbai, she's in the region, she's right there, and I hope you're enjoying your trip there to Delhi as well. So hopefully I'll share some of the stories that I think you'll find interesting. Now, I want to make sure that we bring this a little bit into context around what's happening around the world. And the first point, when we talk about the pandemic patterns that I think most of you have now learned and seen, and maybe one of them that you spend a little bit less time around. And one of them would be the last one there, because you know it starts with weekend, how local and regional domestic business and the leisure side, but it's on the price. And I will talk about ADR and rates today. And I think that's very relevant where India is and the South and Central Asian region is, because people are less price sensitive. And we're seeing how this is impacting the comeback overall as well. So if you look something as important as domestic, we know that domestic markets around the world have had this major engine. And sure, Maldives is an anomaly, and that changes things. But if you look at two markets here, like, say, Gold Coast and Sanya, they have done reasonably well throughout the pandemic for obvious reasons. They have a lot of interesting things to offer for the public, but they were always meant for a big domestic public. But Bali and Phuket, even though they are large domestic countries, they were always benefiting from the international travel and not so much now. So obviously, big different schools and what's been happening. Now, when you look at people ready to travel now, domestic is key. International travel is not yet happening to the same degree. And the main reason for that, we know it's restrictions, it's legislations, quarantine, having to poke your brain at any given time, 5 times a day, and pay for it yourself. It's masochism 1.0. It's not very pleasant. That's holding people back. The good news is when we ask people, are you ready to travel once it just weeds off a little bit? Yes, they are. The majority keeps telling us from a leisure perspective, we want to travel and travel even more than we did before once it opens up, because I'm sick of this. And even when you take something more complicated like corporate travel, because of bureaucracy and sustainability you have to comply with, and maybe budgets and all that, people are saying we are willing to travel after this, absolutely. And one thing we've been reporting, maybe more importantly, people have spouses and partners at home, and they are telling them, please leave the house. It's been 20 months. It's too crowded. You got to get out and back to your business travel. But jokes aside, travel managers is another big component that carry a lot of this growth around the world. And what they are projecting is that in a year from now, when we reach the Q4 next year, we're looking towards a almost recovery of, say, 60, 70, even 80% of where we are now. So there is hope in terms of that. But when we look at the overall numbers from a macro view, we start at the higher view where we are in year to date around the world. And you'll see that 8 months in, so end of August, recovery's there. Pace varies a lot, tons of different stories. 2 different colors of balls there in this, of course. The lighter green ones represent occupancy when you include those rooms that are closed, right? Markets, total market, really. So more interesting perhaps to see 2019 indexing. How far are these markets and these regions from 2019? Europe and Asia, when you exclude mainland China, clearly stand out here as 50, so slightly behind the others. But let's talk about that rate, right? Because ADR on the same level is much higher. And this is an omni crisis, right? It's not a problem for one, it's for everyone. It's about demand. So these very high index rates are compared globally very well to the occupancy. You can say that the lack of group demand, right? Because international MICE and group demand also plays into this, because increased share of higher rated transient travelers push this up. Then you have high-end travelers, less sensitive, pent-up demand, I'm ready to pay, let me just go. All these things and more contribute to this. Just look at August when I flip this chart one more slide, and you'll see even above 2019 levels. So very impressive numbers in the last couple of months in many parts around the world. So if you look at the trend line overall for occupancy, the main takeaway here is that all these major global, this is high-level trends, they're moving in the right direction. If you put a trend line, it's all moving upwards, and that's the main thing. The key takeaway from the same chart with rates is, of course, that the V-shaped recovery continues. If someone drops, it doesn't drop as far, and it recovers quickly, and rates, globally speaking, are hitting very close now towards the last 10 or 20 percentile of where it is. We also know that events and holidays have played a really important part throughout this recovery, right? Globally, you can see here, you see mainland China, some spikes, that's a holiday. You got Labor Day in the US, you got European summer holidays, you got Ramadan in the Middle East. All these always combine and tell the same story for 20 months, that pent-up demand is real. We've seen it time and time again. And if you put any kind of market, and this is the Middle East an example, you will very often have buckets like leisure, quarantine, or restricted demand. So here you have, say, Dubai, where it's actual leisure travel that is happening, and that's great. I suppose you could put Maldives there from an APAC reference. Quarantine domestic, APAC, that would be Philippines and Singapore, completely held up by quarantine demand. And then you have restricted markets, more like Thailand, Vietnam, and Sri Lanka, I suppose, compared to these markets. Now, when we look at Europe, the main story recently is just how the markets before Delta, so in the middle of the screen there, were kind of dealing in the same way. Delta spread things out, very serious, of course. Since then, it's become more aligned, more markets ranging between 50 and 80% occupancy, moving in the right direction and moving in the same direction, many of these markets, right? And then we see the same thing happening with rates. So all these dots, even though there's a few yellow dots, which means that you're not quite there in rate, many are green and even some purple. So we're starting to see more, particularly Western European markets, that are driving towards higher rate compared to 2019 levels, that is, which is quite the testament. So what's really giving people hope and ambition is the booking pace. What is on the future bookings now? The confidence you get from looking at data like this. Belgium, Italy, Spain, UK, markets where the occupancy on the books and the pickup pace steadily increasing, showing a stable approach that, no, there is bookings happening for the last few weeks on the books and also moving into Q4 and ahead. So that's a great signal. You might recall this slide. If you don't, I'm sorry, but that was only 3 minutes ago. That gap between Europe, 41 and 51, what the occupancy is, that's, of course, hotels being closed. So we don't really have this situation in Asia Pacific or, say, in the US now. Still a little bit more in Europe, how markets like Belgium, Israel, and Spain, they still have some closed rooms. And that does obviously matter. It's by the product and by restrictions there. And only a few of them is for renovation. It's obviously about the COVID situation that matters. So one of the decisions you look at this is profitability. So I need to close now because I can't make, it just makes sense from a profitability standpoint. It is encouraging from a global map. Apart from Southeast Asia and a few other areas, we're starting to see more green areas in GOP per available room as well up until July. So, and August and September is definitely moving in that direction as well. And if you look at it with total RevPAR and GOP par, the takeaways here would be, you take a market like in the middle there, New Delhi, of course, 43% total RevPAR. So that doesn't sound great, but you have to remember you're not Amsterdam or Bali or Bangkok with low teen numbers. And you're not Maldives. You're not, 92% GOP per available room compared to 2019. These are really high numbers, extraordinary, because the market's open and doing quite well, and the impact is coming so quickly on the bottom line because of that rate not being as impacted. So we talk about hotels. let's use London and UK as the canary in the coal mine in terms of outside hotel sphere as well. So interesting to see, and this is a long view of 12 years, you'll see that at the very end to your far right, office vacancies have increased so drastically. They're up there at what, 2013 levels? So there's a lot of empty office spaces in London, which you kind of expect. At the same time, rents are declining in office space, not just slightly in the rest of the UK, but now negative growth at the end of last year coming into this year in London. So there is that. And then also you can add, we know the retail availability in the market. If you want retail space, it's up to almost 2012 levels in availability. This also means that transactions across the UK is up to lowest level since 2012. As you can see, it's half down from 2018, which was 30 billion pounds. And it also is seen in hotel transactions. So 2 years ago, some high volumes. Last year, a few deals. This year, nothing yet, right? Almost. It's very, very low, something that we would expect to maybe change then in 2022. So let's get into Asia Pacific and talk some of the highlights. Now, if I look at this graph, and it's showing you 45 days, what's been happening on the demand, just to pick up what's the recent most interesting story. Not much, but I would look at mainland China coming back from the Guangdong outbreak from Delta. I would look at Indonesia doing something, a little bit Australia, and hope around Malaysia. That's kind of where it is. But what really is interesting is finally we're seeing some more good headlines. We're seeing people talking about, all right, let's open Langkawi. Let's do less quarantine in Thailand. Let's do the same in Japan. And Vietnam may be considering lowering their zero COVID strategy. But at the backdrop of that, I'm in Singapore. Yesterday, they decided to cut back. We've 83% double vaccinated here, and we're still taking a step back because the government has a little bit of fear about the hospital beds. So Asia is now extremely cautious compared to many other markets, West and India as well. So that's a big, big difference. Now, who is really leading that Southeast Asian chart then? Well, it's not really Philippines and Singapore because that is government-induced occupancy, right? That's all quarantine business pretty much at this stage. But it's Indonesia. And I call Indonesia out because there is an Indian kind of similarity, how it didn't really lock down, but then it had to because of the Delta and really horrific scenes a few months ago, but it's coming back, and it's also coming back with weekday business. People traveling around the country more and more now, which is really interesting to see and good for Indonesia. Two very large domestic markets, of course, Australia and China. The main difference with these is that, as you can see, China continues with V-shaped recoveries in 2021, whereas Australia is more long-term and U-shaped, if something like that. And I suppose one of the key reasons is Australia, you have the states making different decisions and a little bit of ambiguity about the vaccine. That's more in China, one big machine and handled one way. So you can see the clear difference in how that impacts a big, big domestic market, more relevant to India, I suppose, as well. But one of the key points I want to call out about maturity in COVID comeback is this. So before this summer outbreak in China, yeah, you had leisure, it's summer, leisure markets are higher than what we call them business cities, so more corporate travel. When it drops, the key factor for me is that it drops, say, only to 36% in occupancy in corporate markets, not 15, not 10. So there is a V-shaped recovery, and it's also a smaller fall down, which means that they will recover faster, which makes sense. Now, from a P&L perspective, back again on the GOP par and the margin, normal trading conditions a couple of years ago, no surprise, Singapore, Tokyo, Bali, high numbers there. Now, you would expect the axis here to be low and big changes, but it's an example to show you just how much it matters, say Bali, Bangkok, and Kuala Lumpur, when restrictions are that harsh. Those are extremely restricted markets now for 20-22 months, and that's why they fall so much behind. But it is encouraging when we look at what's happening in P&L for this year in GOP margin, because Australia, Sydney was up there, obviously with the outbreak, they fell back down again. Singapore continues by government to get it. And then you have these markets that are starting to edge their way up as well into the market, and obviously Maldives doing quite well, which I'll tell you in a second. Because I want to wrap this up with South Asia and what's relevant to your markets there where you are. And I wish today that I could speak a lot more about Sri Lanka. I really do. It's a marvelous location and destination that I really like. But unfortunately, the best way to show it is to put Vietnam next to it, because they are two markets that have been the most impact on just such a almost flat line, below 20% occupancy, restrictions, the vaccine rollouts, and all that complexity that comes with it. Now, we're hoping very soon, maybe the end of this week, that we know more about how Q4 can open. That would be fantastic. We need to see some of that happen so that also Sri Lanka can start opening up and gain, obviously, from an Indian source market, hopefully as well. One market that hasn't been still is, of course, India. And it's so nice that this event, like, I'm so happy that you guys are doing it. We had to wait for a bit, but here you are in the room, all of you, and look at these occupancy and RevPAR to the center. But the main point for me is the ADR in the middle. It did not drop that much. It did not drop that much when you look at that, when you index it to 2019. It is just as V-shaped as any second wave recovery as you will have seen in China. And that is a strong testament and what we can hopefully see in the future as well. But hopefully no more waves, huh? When are people traveling? Well, the dark greens are the weekends. They are predominantly, they are just higher than the normal weekday business. We keep seeing that throughout the recovery period from June up until now. What are they staying in? Well, it's in luxury hotels like the one you're staying today. Even one weekend there, it hit 2019 levels. So they're staying in weekends, they're staying in luxury. But if we go back to the first wave, what was interesting, leisure destinations like the ones in Rajasthan, like Goa and other places, they were driving this in the first wave from last year, October till December, right? What happened after this spring into Q2 and now is, of course, the reverse. You got key metros driving this, and that's phenomenal, right? So that sends a very interesting analytical standpoint to look at it from a global perspective, because it's really only Indonesia where we see in this region that has been happening as well. So that's fascinating. So I want to move into Maldives before I run out of time. And this is the long story of the Maldives, how they reopen the markets very quickly in 3 or 4 months. We come up. And even though people might say, is it worry there in May, June? Now, seasonality, but a direct correlation in restrictive of source markets. But the cool thing about the Maldives is that they've been able to pivot and been able to just run and find the right source market. These source markets, the first half of the year, nothing like what traditionally is. India plays a huge part in the success of this. So anyone who had the means, anyone who had the time was able to go to the Maldives, and they've made such a good effort in this now coming up to a year. And it's been on the high-end hotels. We know that pretty much all of the resorts are now open. It used to be a little bit less, but now most of it is open, it's running really well, and it's high-end business that is driving that. And it's not just here in this region, it's globally. Compare them to Cayman Islands, French Polynesia, Seychelles. They are an attractive market, obviously, but they've also been able to maintain this success throughout the pandemic and really make sure that people have confidence in going there. And I think there's a lot of learnings for anyone looking to do those things. And in Q3, like I said, occupancies continue in the Maldives, 50, 60%. People are reasonably pleased around the atolls, of course. Maybe most importantly, the booking pace ahead. This is Q4, 50, 60% already on the books. So Maldives are looking strong already where we are now and moving forward. And I think to end with that, you can see, again, from the P&L standpoint, Maldives are obviously spending more in labor costs because they're open and running and finding some really good GOP per available room compared to last year. And if you look in New Delhi, Mumbai, the last 4 months have pushed the rank in the right direction for the two big cities in India, and that we expect to continue, hopefully with no new outbreaks and an awesome vaccination regime that is continuing in India, and we can see those markets getting closer to that. So my final thought is, I would hope by now that more countries and markets work together and really, but I still feel that it is a bit to each their own. And like, I'm not ready to collaborate with country X or market S. Singapore and Dubai are doing things well, but not really collaborating. We're not there yet. But what makes me excited is what everyone else is excited about India. And I'll summarize that because of the recovery right now, that everyone's back with a V-shaped recovery, strong signals to the world that you guys can host these amazing events, that the vaccination is rolling out so quickly. What was it, 86 crore done again, right? So markets like Udaipur and Goa with such high rates, even business travels that are going now like you. And then the weekdays, that people are going into urban locations and traveling weekdays. That's a phenomenal signal to the rest of the world. Is MICE, big MICE next now, bigger weddings, but also Indian markets, for one thing, domestically. Source market seasonality, length of stay, that's completely up in the air, right? Everyone now is looking at the Indian outbound traveler going, I want some of that. So now is the time, obviously, proceed with caution, make the most of the new growth environment, continue the vaccination progress and understanding of it. You're doing so well, but be agile. I'd recommend review your operations at cost constantly. If ever there was a time to review legacy spend, pivot your business model, surely it's now. It must be possible to do without the risk of the guest experience, which of course is what matters so much. With that, I'd like to thank you very much for having me today. I really appreciate it, and have a great night.
Thank you, Jesper, for that insightful start to the HICSA 2021 event.
You're welcome. I'll hand over to Manav and Puneet for a great fireside chat. Thank you.